Thursday, November 16th, 2023, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at why, in my opinion, the possibility or the danger of hyperinflation or a crack-up boom or a currency collapse is still very high. Yes, we've had some economic statistics from the government, not just in the US but also in the UK, showing that what they call inflation is falling and that everything's fine again. And I'm going to reference today Human Action by Ludwig von Mises, and I'm going to recommend a couple of books that I think are really important for those of you who want to know what happens during a hyperinflation. I've had some questions from the viewers in the last few weeks that I should cover hyperinflation, and I have in the past, and I even have a hyperinflation files as a playlist, and I'm going to put this video in it as well, and you can watch all the other ones. Before I start though, I'd like to thank all of you again for your interest in my channel. And for those of you who have recently subscribed to the channel, yes, thank you. And for those who haven't and enjoy my videos, make sure you do subscribe. Make sure you share my videos. Make sure you hit the like button if you like my videos, and so on. And of course, if you want to support the channel, there are different ways in which you can. And all those ways are below in the description of all my videos. So back to, actually, we need to start with inflation. And unfortunately, and I've been speaking about this since this channel started, that inflation has been, the definition thereof has been corrupted. And why is that? Well, because the people who control the fiat currency system, the central bankers, and the people behind them, whomever they are, right? They control the media, they control academia, they control everything, really, because once you get control of the currency and you're the only one who has the monopoly, you can control those institutions and you can change people's perception, just like they've been changing people's perception in other fields like health, culture, and it's not any different with money or inflation. And in my opinion, and it's one of the reasons I make my videos, it's one of the most, if not the most important topic, because half of all our commercial transactions in life, yes, involve money, right? Because unless someone gives you something or unless you steal, you're going to have to exchange some value for that service or that good. So nowadays, though, the media, economists, politicians, they consider doctored statistics, and especially the CPI, which stands for Consumer Price Index. They consider that inflation. So when they tinker with the numbers, like they have done in the US over the decades, like they've done here in the UK, and more recently here, it was in May of 2022, they change all the methodology to make it always look lower. They can say, look, we halved inflation. And that was one of the goals of the government here in the UK for 2023, to have inflation from around 10%. Yesterday it came out, I think, at 4.6. And they say, oh, look, we've halved inflation. But that's not inflation. And you might think, what are you talking about? Well, CPI is a measure of prices. And if you've watched my videos in the past, and I've got an inflation files as well, not just a hyperinflation one. Inflation is the increase in the amount of currency and credit out of thin air, not commensurate with the increase in the economy. It's simply that. So we've had fiat currency inflation since 1971. Is it any wonder that things always go up in price? But it's actually the currency that goes down in value because they create too much currency and the economy can't keep up. One simple way to show you what inflation is, and back when maybe our grandparents and great-grandparents were around, inflation was a different thing. It was the inflation of the currency. And what does that mean? Well, when you produce too much currency, you inflate the currency, and the economy doesn't keep up. It's the law of supply and demand. That currency loses purchasing power, but they've twisted everything now so people believe that the CPI is inflation. So how do they inflate the system in the past? Well, it's very simple. I mean, if we try to do it, it was punishable by death, and probably still is in a lot of countries. It means counterfeiting the currency or debasing it. But when government does that, it's okay. So I'll show a very good example here with the US currency. Here I've got a 1964 quarter, which is 90% silver. But after 1964, they took all the silver out. I think they kept a bit, maybe up until 71 on the $50, but no more silver after 64. And they put, what do they put in the coins? Well, copper nickel, which is worth a lot less. So here you go. That's currency debasement there by the government. If we tried back in 64 or before 64 to issue coins like this, copper nickel, counterfeit them, yes, I think the Constitution says that counterfeiting is punishable by death. But as I said, when government does it, it's fine. So how does this work? Well, silver is a lot more valuable than copper and nickel. So in 1964, you could buy a certain amount of goods. But then when they took the silver out, people are not stupid. So they're going to require more in terms of quarters to buy a certain amount of goods because they know there's no silver. And that's why prices rise. But it's actually the money that has lost value. Of course, now the coins are just tokens, and the banknotes are just tokens of value. And we've lost complete, how can I say, contact with real money. So they're able to inflate the money supply, the currency supply, and at the same time say, oh, we don't have inflation because look, CPI is dropping, even though it's still rising. Here in the UK, they did the same thing. Here I have a 1918 florin, which is a double shilling, and it was still 9 to 5 silver. But after 1920, after World War I, it's usually wars where they spend all your money. They took half the silver out. So here I've got another florin from 1928. So this is only half the silver that was in there. So you can tell probably the difference, and the noise is different. So that's how they debase the currency. In the UK, by 1947, they'd taken all the silver out. And that's why in England or in the UK, it was the sick man of Europe after World War II. Up until the 70s, we had a lot of inflation, or prices were rising. So I said in the beginning that I don't think it's over and there's still a danger of hyperinflation. And why is that? Well, because I highly recommend you read a section in this book, and you can get this book as a free PDF. I'm going to put the link below in the description. And I would read from page 423 in the book, not on the PDF. On the PDF, it starts at 460, but it's 423 in the book. Von Mises the author, Ludwig von Mises of the Austrian School of Economics, talks about anticipation of expected changes in purchasing power of money or the currency. And he goes on to talk about hyperinflation or the Krankheitsboom, or in German it's called the Katastrophenhause. And all that means is that consumers, people, normal people like you and I, realize at one point that the value of our money or our currency is going to continue to go down, and we continue to spend, and we stop saving, and anytime we can, we buy goods and services because we know the money is going to lose value. And there comes a point, and that's when the hyperinflation starts, and it's very difficult to say when it starts. When people rush, they finally realize they're never going to stop inflating the system. And it's very dangerous. And I think in the last 18 months or so, or last 2 years, they've tried to tell us, look, it's going to stop. You know, they've raised rates. But I think the system is so leveraged, especially the financial system, that yes, Wall Street, investors, speculators, they're clamoring for more liquidity, and liquidity, of course, is inflation. So I think it's going to be very hard for them to really stop it, and I think they can't do anything about it. They can publish whatever statistics they want, but people like you and me are going to feel it. They can't hide it. I mean, the other day, the CPI, apparently the component for health insurance in the US dropped 36% in 1 year. So can you really tell me that your health insurance policy dropped by 36% in a year? Well, someone argue, well, that's actually not health insurance, it's something else. But why name it health insurance? That means that they haven't really put the real health insurance on. But at the same time, they say it's dropped by 36%. So it's almost like going out on a hot summer's day, on a very cold winter's day, and you can feel it. It's really hot or really cold. And someone tinkers with the thermometer. If it's like 100 degrees Fahrenheit and someone is like put the thermometer on ice and it says 70, there's something wrong with the thermometer. And so that's what the CPI is. It's just a tinkered thermometer. And that's why I don't think they're going to able to stop the inflation. And that's why I think there is a danger of a collapse of confidence. And it's got nothing to do with cost push, like costs of goods, even though costs are going to go up. It's to do with the currency, all the currency they're creating. And how do they do that? Well, they're doing it through government spending, through huge deficits. And they're going to have to keep doing it because the debt servicing is going up, yields are going up. And we're going to look at yields right now. I think the 10-year yield, yes, it has come off, but I think the longer term trend is higher. And especially when we see the money supply, which we can see here, M1 and also M2, they're starting to level out. And if you look back at 2020, we've had a massive inflation, and we've only gone back down a little bit. We're still way above the levels of May 2020, for example, for M1. M2, we're still way above the levels of May 2020. So they haven't really deflated anything. They slowed it down for now, but it's going to pick up again because Wall Street needs its fix. So as for the symptoms of hyperinflation, I recommend these two books. When Money Dies, that talks about the 1923 Weimar Republic hyperinflation. And this one here, Fiat Money Inflation in France. This is about revolutionary France, how their currency collapsed, the paper assignats. And I'll give you just one symptom because I don't want to keep going too long in this video. I highly recommend you read this. I know many of you have, but I would say that the symptom is that once you start inflating in a fiat currency system, like we have since 1971, when Nixon dropped, well, the whole world off a relatively sound money system, you can't stop because it's based on that, the fiat currency system. And if you try to deflate, you destroy the money in the system and the economy goes into a massive depression, and they can't let that happen. And they think, central bankers, with all their terminology, with all management of perception, with their press conferences, with their dot charts, that they can control the market perception and then control the consumer. But they can't. In the end of the day, as von Mises said, in human action, it's consumers who really determine how badly the currency is going to be debased. If they see that the currency has been debased or inflated, they're going to act. They're not stupid. And I guess one thing they can do to stop it, though, is repression, put price controls. And they're going to try that. And they tried that, of course, back then. So if you want to know more about the symptoms, go into my playlist, hyperinflation playlist. I've done videos about it, or read those two books. So with that, let's quickly look at where the markets are this morning. It's 8:01 a.m. London time. Billy and I, not Billy, Rudy, excuse me, Rudy, he had a haircut yesterday. We got up a little earlier today. So let's see where we are this morning. We got spot gold at 1967. It's up about $8, right near the highs of 1968, and the low has been 56. Silver's up 11 cents at 23.55. High's been 61, low 26. Dow futures is up 16 points. Nasdaq future is down 25, and the S&P is down about a point. To the currencies, sterling is down 1/3%, 123.77. The euro is unchanged, 108.40. The dollar is unchanged versus the yen at 151.37. And the key level there for the yen, and this, of course, is in terms of weakness, is 151.90, I would say. That means the dollar's getting stronger and the yen's getting weaker. The yuan, let's see, the dollar is unchanged versus the yuan, 725.90. Let's go to the other currencies. Aussie dollar is down 0.4% at 64.80. The dollar is up about 0.15 versus the Canadian dollar, just above 137. And the Kiwi dollar is down about 0.2% at 59.81. To the commodities, WTI crude is down 0.7% at 76.02. Brent is down 0.75% at 80.40. Platinum is up slightly at 902, and high-grade copper is down 0.25% at 374. And the 10-year yield, someone noted to me yesterday that it's becoming quite volatile, which is not normal for something that's a risk-free investment in the safest, supposedly, government bond market in the world. But be as it may, yeah, that's what we need to keep an eye on, the volatility of the 10-year. Right now, though, it's down 4.5 basis points, around 450. I think we could still go further down. I think the key level below is going to be 433. And why is that? Well, because it used to be a very important resistance up until recently. It was the high from last year, and a recent high earlier this year. And once we broke through there, we went straight to 5%, almost straight, virtually straight. So if it corrects down, it will test that level. My money is that it will test that level and then start going up again, but we'll have to see. Anyway, with that, I'm going to wish you all a very good day. Take care. Bye.